Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide online valuation services for mediation and litigation based in St. Louis, Missouri. Today, we will discuss Donald Trump's tax return, and it's really a case study for divorce attorneys and what to look at in a personal tax return with Jason Soman. He's a valuation expert in Boca Raton, Florida. He owns his own firm, Accounting and Valuation LLC, and he's specializing in business valuation and forensic accounting in the context of divorce. Welcome, Jason. How are
Thank you,
you?
Melissa, for having me. It's a pleasure to be back on.
So, why do we care about a refund in a divorce?
Absolutely. So, I mean, this all comes back to the concept of when people are getting divorced, it all sometimes seems that their income situation just tends to go down, their assets become less valuable, and you start seeing people try to play games. So, something that some people may not be aware of is that at the end of the year when you file your taxes, you have the decision whether you want to get the full refund back or would you rather apply that refund to future years. So if you look at the Trump's tax returns, he overpaid his taxes by 13.4 million. So that should be the full refund. But then again, you'll see on line 35A, he only took 5.4 million as a refund. So that means that he took $8 million to be applied to future taxes. And the reason why that's an issue is because the definition of an asset is that it's going to provide some future benefit or extinguish some future liability. So the $8 million that they left with the government, that's an asset that we need to account for in determining the value of the marital estate, because let's say that the filing date in this case was 12/31/2020. It's very possible that $8 million, let's say the divorce is over by 2021, that $8 million that Trump would benefit from that because he's going to save $8 million next year on taxes, or he could take that $8 million and keep rolling it forward. And you would be surprised at how often someone getting divorced thinks that I'm not going to take my refund now. I'll wait till the divorce is over. But this is a quick way that any divorce attorney, any accountant could say, hey, there's an $8 million asset here. Let's get it on the chart, get it on our spreadsheet. Let's put it on our radar. And I think that's a lot of the moral of the story as we start going through these tax returns. It's like we're building our radar. We're trying to figure out every single asset that's out there, every piece of income that's out there. And we're constantly, I like to use the analogy like a GPS, right? Like we keep going, and then sometimes we have to recalculate our route based on new information. So great place to start and start building that universe.
And this